Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, April 15th. Good to be with you this morning. Agnes, Jay, Peter, Ted, everyone in the room. We just got the release of U.S. retail sales. I was waiting for the print, came in at 9.8%, so much stronger than expected. Obviously, this is the reopening trade that everyone's looking for. So we'll see what kind of impact, if any, that has on the dollar. But we got a full menu today. Lots of levels. I could sum up the first four setups, guys, with just very simple numbers. DXY 91.30, Euro 120, Aussie 78, Sterling Aussie 177, Kiwi 72. I mean, there's some key regions coming up. So just as a joke, we'll go through all of these in a moment. Good to see you guys all in the room. As always, any questions or trade setups, feel free to throw them on the message board. Aside from those I just noted, we'll hit Kiwi, dollar yen, dollar Swiss, gold, sterling, and dollar CAD. We're all at some pretty major levels here heading to the close of the week. Some quick housekeeping. Next week's a full schedule. I won't have any webinars here on SB. I will be on Daily FX on Monday. I'll do the midweek with them on Wednesday. On Tuesday, I do have a roundtable. This is going to be an interesting first go with my colleagues David Song, and you guys probably know James Stanley. We'll be just doing a sit-down roundtable talking about the markets, what we're looking at, different setups, keep it more casual, but they're trying a little different forum there. So that'll be on Tuesday afternoon to allot for some of the West Coast crowd. And then on Thursday and Friday, I actually have a medical procedure. I'll be out for a small surgery, so I'll be back the following Monday. So again, a little bit of a bridge version next week, but we do have live events Monday, Tuesday, Wednesday into the start of the week. All right, let's jump right into price. So retail sales, like I said, stronger than expected, but it's essentially, I guess you want to call it the reflation trade or the reopening trade. Here's what DXY looks like on the weekly charts. We broke a pretty big support level at the 92 handle that we were looking for. The decline certainly seems like there's the risk for further drops here from the weekly standpoint. I'm going to show you the daily chart in a moment, which has us coming into some near-term support. But long story short, 91, 90.82. That's what we're going to mark as our near-term bullish inbound. Really don't want to see any weakness beyond that if dollar has any hope of holding its ground here. So on the weekly chart, you're mid-range, right? There's not much to look for here. Here's what we've been focused on. So near-term upslope support of the basic pitchfork that we've been in off the yearly lows, simple low, high, low. There's the lower parallel. You have the lows that you made for the close low for that March swing. That was 91.42. The swing low gives you like 91.32. It's a 10 pip range of support. And that's basically what we're looking at. Keep in mind, guys, this has been a one straight shot. We're down 2% in just 3 weeks. You've had 3 up days the entire month. Yet with all that downside pressure, momentum is still holding 40, and price hasn't even broken uptrend support. So just when everyone's getting on the bandwagon as, oh yeah, dollar's bearish, here we are at support. Don't get faked out. We're heading to the close of the week. Here's what the intraday charts look like. And again, it's not just based on the DXY. You're going to see a similar stance across the dollar crosses here as we get into Thursday trade. Here's the basic DXY the chart we've been following. Okay, again, no change. That was the daily chart. We broke that support. We're right here, right now, just ahead of it. And again, here's what the scalp looked like back on the 13th. We noted back here we had broken the weekly opening range. That was a pretty clean weekly open, guys. Resistance, make a low, you test the high again, break of the low, shifts the focus down, looking for a Thursday, Friday low. It's Thursday. Major key support 91.30, 91.42. So I want to see a reaction here. Okay, it's pretty important that we get some sort of inflection. You can see that in and of itself, that level has been a major contentious region. Here's what it looks like on the 240 chart, 4 hour. Nice pivots in price right along this slope, or right along this plane, I should say. And it converges on upslope support. So that's the region we're looking for, 91.82 resistance. Unfortunately, I want to keep bearish in validation at 92.20. That's the objective weekly open. So like watch this region here if we do get the recoil at 92.10. Basically, you're looking at basic slope resistance, could be a bull channel. end of the day, I'll still want to break above the weekly open to validate some sort of near-term shift in price. Any questions on DXY and where we stand now? Interestingly enough, we're pretty light on data, okay, as we get towards the end of the week, as we head towards rather next week in the US dollar. The bigger play is the euro, right? You have the ECB on tap next week, so that might be a decent play. You have inflation data, core inflation data all over the place next week. You have the UK, you have Canada. So we'll definitely get a better picture of some of the dollar crosses and how that could impact it. But for the dollar in and of itself, this is big, and you want to look for some sort of inflection off of this region here over the next 48 hours. Hey, man, great to see you. Hope all is perfect with you as well. All right, so that's it's as basic as it can get, guys, on all of these next 4 setups. This is all we're looking for. DXY reaction at 91.30, 91.40. Here is what euro looked like. So take back to last night update. We've been following euro back to back for a couple of different days. I just wanted to highlight major critical resistance. I published this weekly chart on Daily FX yesterday. It's right here in this zone, okay? Recall that 120 was a massive level that we were looking at, both on the way up and the way down. 120 is defined by the objective 2018 yearly open. So an objective level, major pivots along that plane. Again, break, accelerated run, resistance in the highs that we made of August of last year, break, accelerated run, support, break, accelerated run. We're right here. That's 120. It's not only the 2018 objective yearly open, but it's also the 618 extension of the advance off the 2017 low. Okay, so the basing that we made here, 1, 2, 3. There's your 618 extension. Again, it caught the high, break acceleration, that's resistance. In case that wasn't enough, you have the 50 objective of the yearly range. Now, 50, again, is not a real true fib, guys. It's just half the move. But a lot of times markets do have tendencies of retracing half of a move before the resumption. So all of that is stacked up at 120, 120, 26. On top of that, this week, again, you can't make this stuff up. The basic slope that we've been following off of last year's low, resistance, break, acceleration, support, bounce, break, acceleration, that slope is in this zone this week and next week. So kind of bodes well, right? DXY a little bit lower in support, euro a little bit higher into resistance. Here's euro on the daily chart. Okay, so that was the weekly chart as it looked yesterday. Again, daily chart. Here's what it looked like yesterday as we were peaking right above. And as we noted, a couple of days past, I was giving you 2 levels, 1950 and 120. I'm looking for exhaustion off one of these 2 regions if we are going to kind of move for that drop lower. Now, I haven't been too thrilled with this slope, and I don't want to encourage people getting too liberal with, just kind of matching the slope to what works, because that can lead some really detrimental trade and analysis practices. But if we are just to tilt the support slope, something like this, you can see that the range, right, basic parallel off that low converges right here on 120. So I don't know if I want to work with this slope, guys. The interior actually does look decent, but again, it's taking too much of a license there, but something to consider. At the end of the day, still 120, still 120, still 120. Here's what it looks like on the intraday chart. And again, this is the unfiltered, right, or unadjusted slope that we just looked at. So if we do the same thing here, kind of just adjust the slope to that support. Sorry about that. Something like this. Again, kind of highlights congestion here. There's so much loaded up here. So euro, again, you know, marking some divergence, maybe a little strike higher. This is the 4 hour. Here's what it looks like on a 2 hour. So the divergence I was noting this morning, price action higher high, higher high, higher high, lower high. Here's a outside 2 hour reversal candle. So the initial strike looks good. Again, I would love to see this kind of price action materialize into the US Open, so 9:30. But all things held constant, guys, it's all about the 120 handle. If we break above 120, there's really not even any interior targets until you get to the 121. It's a 100 pip shot. So looking for possible topside exhaustion here in Euro today. Don't fight it. A close above 120, again, would keep the risk for a pop towards 121. All things held constant, you're at resistance. You're at resistance. Questions on Euro. Again, ECB on tap on the 22nd. You know, no change, obviously. It's just all devils in the details and the commentary that comes alongside that. All right, number 3. Here is Aussie at, you know, big rip. Major sort of reversal breakout out of nowhere. So the contraction that we had seen, let me take you back to the weekly charts here on Aussie. We came into some big support on Aussie early in the month rather, with this level here. All it is the objective opening range lows for the year. It was also objective upslope or channel support. So ever since we hit 75.63, we've been kind of on the lookout. Now, once we got into that zone, here's the daily chart. The monthly opening range was clear as day, right? You had a real tight contraction. Here was the monthly open. I noted that we were just contracting here. This is essentially your bearish inval for the near term. That's big resistance. So here we are, got the break. Top side break of the downslope off the year. We made short order of 77.13. In fact, on the same day that we broke yesterday, we closed above. That's conviction. That's when you look for, when you always hear us say we're looking for more evidence, we're looking for the conviction break. You know, that's exactly what you want to see. So Aussie, maybe a little bit more to go here as well. Big levels don't start coming up until like 78. I'll show you the near-term chart in a moment, but the 2018 open, again, some symmetry there with what we were just looking at with the euro. And then you have the 618 of the yearly range at 78.25. So that's critical resistance. But certainly looks like there's a little more fuel, or at least a possibility for a drift higher here. Here's what it looks like on the intraday. And here's what it looked like again last night. So the level was the 50. Okay, and that is essentially 77.70. We didn't quite get there yet. I do want to note that we're marking some pretty strong divergence here again into the upper parallel. The high registered just ahead of it, I think it was like 77.61. 77.69 was where the retracement's at. Again, I'm not crazy about 50s, but there it is. 7,800 is the bigger level. So what do you do with this here? If you're holding longs, I can't suggest, or I can't really press you to get too aggressive on this. I'd be taking a little off. If you want to leave on for the extension to 77.70 and maybe even 78, your stop would need to be above, or below rather, 77. We could pull back here, again, dependent on where we are in time. The median line converges there, right, basically into the open of next week. So you can envision a scenario where you get some exhaustion, or you get some more dribble, you actually get 77.60, and then you start to pull back towards slope support. But definitely the immediate advance looks a little tired. I wouldn't want to be chasing this here. Now, with the same respect, if we were to topside breach, a breach of upslope, you'd be at 78, in my humble opinion, 78.25 in pretty short order. So for me, it's not really a game of trying to get long or trying to even play the long side from here. I'm on the lookout for exhaustion. I'm done with the longs. You know, you probably could hold on to 77.70, but I'm on the lookout for possible exhaustion here. Okay, keeping in mind that this is an objective break of the monthly opening rate, monthly opening range. Tongue twisted this morning. It was a clean break of the weekly opening range. But that being said, we've extended, right? You've had a 4-day consecutive rally off of the monthly open into fresh monthly highs, heading into upslope resistance into 77.70. Look for possible exhaustion there. Now, if it resets and it pulls back 77, a pullback in 77 might actually be an opportunity to get back in. but the immediate thrust, I'd be cautious about chasing this up here. Questions on Aussie? All right, that is number 3. Loving those 3, DXY, Euro, Aussie. You know, inevitably, I didn't want the break to happen the downside in the dollar, but it happened so quickly and so decisively, and the levels were so clean, the ranges were so tight that it gave us an extended play. So let's see this through. Pound Aussie. Did any of you get involved with that one? I set up that, or I put that setup on Sunday because I just thought it was really compelling. I'm not sure if someone here in the room, I don't see March in here today, but I'm not sure if someone here in the room had brought this up or asked about this, but man, it was such a big move. So with Aussie at support, right? And that's kind of where this all harkened from. Aussie was at support, sterling was at support. We brought up a picture of pound Aussie on the weekly chart, and that had us at support as well. Right into the start of the week, we were at basic channel support, 3-point touch, so it's a confirmed channel. And we just came off of big resistance, a basic 236 of the decline from last year's high. The October high week reversal close that we made into the close of the year before the dump, and upslope resistance, all right here. We spiked into it, pulled back into support, and our focus into the start of the week was what's going on here, right? Let me go back to the previous update here real quick. So here's pound Oz right into the start of the week. We want to see what happens there. If that breaks, the 618 of the entire 2016 advance is right there at 77.23. The daily chart looked even more compelling in that you had a really nice momentum signature as this thing drove into that 236. Again, a quick look here on the daily chart showed that again, that extension off the low was 2 equal legs almost. We turned just pips ahead of the 100% extension, and that added to the conviction of, okay, we might have completed a pattern here and moving lower. Here's the break. Again, accelerated move is exactly what you want to see. And here's this cluster of fib levels right down here. So you're looking at like 77.12 into 77.40. You're also looking here at the objective yearly open and the closed lows that you made back in February. Massive zone, massive zone. Here's what it looks like on the intraday. And again, the scalp is just so clean, guys. Just lower. There's a critical zone of importance into 77.13, again, 77.50. Here's the 2 hour, what I have there on the chart. The 4 hour, let me show you the 4 hour here. So it just looks the same. Okay. And just to show you how this played out, I mean, we opened the week with a really nice rebound right there that held, bounced higher, right? Here's the failure right ahead of the channel, and here's the break lower. That break lower, we were looking for 78.40, and then here's the big whopper at 72.48 on the top end of the zone. The bottom end of the zone is the 77.13. That's the yearly open. Not only that, the 100% extension. So 2 equal legs. Even if this is just correction, we're getting all hot and bothered and excited for no reason. You know, 77.48, 77.13 should still be on tap. So look for a reaction there. Look for inflection there. Look for possible downside exhaustion there. Okay, and remember, this is Aussie strength. So it kind of bodes well with what we're seeing in Aussie dollar on the breakout. A little bit more of a push towards its lateral resistance level. Questions on either of these setups? It's been a while since I've actually gotten involved in a cross, to be honest with you. Been all about the majors. The levels have been super clean, and while the ranges have been tight, there's been opportunities inside. But this one, when you have the congruent price action of sterling where it was and Aussie where it was, I think it was just a really, really nice tell here. So nice pivot, nice break, nice clear of the weekly opening range was the tell. Looking for a reaction down to 77.50, 77.13. Okay, that's number 5. Any questions on sterling Oz? Or that was number 4. Next up is Kiwi. So on the Kiwi front, you also got a similar breakout here. I don't really have us, this was what it looked like last night. I don't really have us at a major resistance level here in Kiwi. And I think, again, we could be off on slope. There's a couple of different renditions I can show you that has us near an upslope here. But at the end of the day, 72 is still going to be the better call for me. So that's the 1618 extension from the advance off the low. It's the 50 off the high. You have a decent pivot here in price over the last couple of months. So mid-range, I don't really have a strong opinion from here. I think you could get a little higher, but I don't want to continually kind of try to ride that press. You are still in overbought condition, even in the near-term charts. The breakout here, okay, let me just put kind of a side-by-side or a back and forth. Here's Aussie, here's Kiwi. It's a completely different animal because of where they are in trend, right? Kiwi broke the yearly opening range, dumped into a new fresh yearly low, and then broke downtrend resistance. The recovery still takes it not even into the week yearly open. We're still below the yearly open. Aussie, a little bit different of an animal here. Aussie, not only did it not break to fresh yearly lows, not only did it not break upslope support, but it's trading above its objective yearly open. So these non-confirmation highs, non-confirmation sort of divergences in price have me thinking, again, be very cautious on this rebound. And another reason why I think we are near-term exhaustion is upon us on some of these extensions. So keep that in mind. I hope that offers some clarity there. So if we go back and we drill down, Kiwi right now, the weekly chart, I would be looking for a close above 71.61, and I want to see if that's a tell. That's the outside reversal. It wasn't an outside week, excuse me. It was a high reversal week for March. And I want to see how the week closes with regards to that. Here's what it looks like, or how the day closes, excuse me, with regards to that. Here's what it looks like on the, again, intraday. The ideal scenario is you get that spike towards 72 and a failure somewhere near there. But I just don't have any slope references that really, are super effective. You could do something like this, right? I was looking at this morning. Kind of puts you in the mindset of upslope resistance failure. You'd want to see support somewhere around 71.30s, and the spike in time, if you're going to follow that plane, somewhere into the close of the week or early next week. I don't have any conviction on this. I don't want to get radical with it. This eliminates the slope right off the bat. So a little bit more precarious here on Kiwi, but I'd have alerts set at 72 and 71. I want to see it clear of that 100 pip range. Inflation data out of New Zealand also next week. Just inflation rates galore. So that's Kiwi, UK, Canada, and Japan, all with inflation data on tap tomorrow, next week. It's going to be the talk of the town. And guys, again, anecdotally, I don't want to get into the fundy side of things, and I certainly don't want a political debate, but with regards to inflation, the numbers were strong. They came out stronger than expected, but everyone's telling you chill, right? Even the Fed is saying chill. It's transitory. Now, for those of you who have been trading for a while, and we go back to 2008, we remember the transitory statements, remember the whole story of this is going to be short run, but we also remember how they fell a little behind, right? And in generally speaking, monetary policy is lagging, right? It's not a scalpel. It's not a blunt instrument. And you don't, I don't want to get into it. Long story short, inflation is starting to come up anecdotally as well. If we just look, guys, at the most objective price increases over the last quarter of the year, right? First quarter of 2021, you've seen energy prices go up. So that's at gas, electric, natural gas, all gone up. Energy prices up like 40% if you're just looking at fuel or just looking at gasoline, petroleum. Agriculture, right? 14% on last thing I looked at. If we look at lumber, now the lumber thing is very interesting because lumber prices are just astronomical. It's ridiculous. But that's kind of to be expected as you saw the mass exodus from sort of big cities more into the suburbs, more construction pickup. There's, demand is through the roof. Again, anecdotally, I can tell you, me and my wife were looking for a home just to move a little bit deeper, and it's been tough. The inventory is low, prices are through the roof, and while the rates are extremely favorable, you're running into this, right? So it's a great time for me to sell, but I'm going to make it here and lose it here. Bottom line, the real inflation, in real terms, okay, that's what the Fed dubs core, is definitely apparent and blatant. The whole question is it transitory, like Powell says, or is this the start of a longer running inflationary run? You've got unprecedented fiscal stimulus. Trillion after trillion after trillion keeps coming up, in addition to the Fed's easy policy. I'm not trying to wave any red flags or raise any alerts, but objectively, it's not a recipe for a transitory type of position. So it becomes more important, guys, in the weeks ahead that we pay attention to the inflationary picture across the pond, around the globe, to see if the inflationary concerns are something deeper rooted and more global, or is it just because of all the unprecedented things happening here. So that's why next week's inflation gauge, I'll be super interested in just kind of taking that gauge across the board. Obviously, we're running hotter than any other market, so no one's going to be anywhere near the 2 point whatever clip we got last week, but it'll be interesting to see. I've heard transitory like 50 times this week, so let's see if it's localized or if it's more of a global event. Anyway, I'll leave that there. A little sidetrack discussion there. That's Kiwi dollar. Any questions on Kiwi? Quick note on dollar yen. I don't really have a lot to say here, but we're kind of heading towards support. So here's our last dollar yen update. The major focus here was the seemingly clear false break that we got above major resistance at 109.90. The weekly chart was just a mess. This is classic abomination move, right? Here's what it looks like on the daily. We closed the month and the quarter above uptrend resistance, lasted 5 days, closed, pulled right back below. So right into the open of the week, we were basically sitting on slope support, and it looked pretty precarious. You had really nice momentum, a 3-point trigger break there, shifted the focus lower with a break, false break of resistance. It looks for a move towards essentially the median line as just a base case scenario. So you had a couple more days here. You tested that high, you broke lower, and here's kind of the slow burner low, now losing steam. Classic dollar yen, right? What is this? You're no man's land. Resistance is still 109.90, 109.67. Key support isn't until 108.25. So, yeah, dollar yen. Ugly, ugly, ugly. Here's what it looks like on the scalp. We're looking for that possible bear flag off the highs. 100 off the high, so 2 equal legs would take you down into this zone, basically right around the 108 handle. Here's what it looks like on the intraday. So no change. It's been a slow burner. Just bring 240 chart, bring those the same. So just a slow, sort of trickle, slow dribble lower. The low registered just now at 108.66. 2020 objective yearly open comes in at 108.62. So again, not my cup of tea, but there it is for you. Resistance still 109.92. That's near-term bearish inval. We topped that. You're looking for 111.20 and 111.60 again. But the whole question is whether this gets sort of the risk for a deeper dive here. I'd want to see a reaction here, both on upslope support and again, Fibonacci, it's a 618 longer term of the decline off that March high we made last year. the 100 right into the 108 handle. All right. That's the abomination in spades there for you. 1, 2, 3, 4, 5. That's number 6. Number 7 is Swissy. Coming into some support. It dropped a little bit lower than we wanted to see. 92 is a level I wanted to kind of look for inflection off of. Is a 38.2 retracement of the entire advance off the lows that we made back. Well, it's the yearly range. For this one, kind of tricky. Weekly open. This is the 4 hour. I'm going to get you the 2 hour. Weekly open set, it looked like a pretty decent weekly opening range. That break looked like a kind of should be a break of the weekly opening range, but we quickly recovered and we're still kind of just sitting laterally. Remember where we are on the weekly chart here, or on the daily rather. This is the zone we were looking for a recovery. Obviously, again, it dribbled lower than expected, but here's the bounce. If the turn here was larger, this is downtrend resistance. If the turn here is larger, the recovery may have more to go, but you're essentially looking for like resistance into 93 or inflection thereabouts, at least to give you the resumptive move. So low conviction, range bound, we haven't changed any of the positioning or levels. Just a quick note there on what we've been looking at with Swissy. Here's the last Swissy update. Dropped into this level. Again, kind of want to see weekly open hold resistance. We've just been straddling it and we're still there. So a whole lot of nothing for dollar Swiss. I think you're going to look for cues on this one with euro. If euro extends and pulls off that key resistance, larger possibility for at least a larger recovery here in dollar Swiss. All right, let's get into something that actually does look interesting. Here is gold, and then we got sterling and CAD. Here's gold. So I should have selected my words a little bit more carefully. I wouldn't say interesting. Look, for the gold point, the whole point of this setup into the start of the week was look for possible downside exhaustion. Now, I would ideally would have liked to see the drop towards that 50, which is 1718. Once this 38.2 broke, I kind of removed it. It failed right there and rebounded. So it's a very similar scenario to actually where Swissy is. You're kind of still in the weekly opening range. Like, what the heck is that? The range break for the week is not going to offer anything at this point. But it's all about the bigger picture. I still think you possibly get 1760. Here's gold on the weekly chart. So if you guys recall, this was a big level, this was a big level. Both of these levels were levels we were talking about in January, of which we would want to see a gold low. That's where I want to see this pullback, this correction terminate, especially 1650, because that's 2 equal legs off the high, the hallmark of an Elliott wave pattern correction. So we got 1690, great, awesome. We got another drive into there, it held again, great, awesome. The recovery still at risk. The recovery failed, but we're still not at resistance, still not at support. Momentum is flatlining weekly. Really messy picture from a weekly standpoint. Levels you need to know, 1767, 1763, that's near-term resistance. Bearish inval, 1785. Daily chart looks like this. Oh, I only had the scalp here last time. So let me just show you this daily chart. So here's your monthly open. Here's your stretch. You had a 5-day, 6-day stretch into a high, and then that's basically the extent of the monthly range, which holds now. So again, here's the pull. What is this? What is this? Nothing to take note of except 1767, 1763. Again, 1785, bearish invalidation. Monthly open support at 1707. That's going to be the break that puts you back on track for 1650. Everything in between is noise. Well, what does that mean on the immediate front, though, Mike? On the immediate front, the whole focus of the week has been look for, bottom, look for downside exhaustion here for the last pump. You didn't get the drive as deep as you want it, and here's the pump. So 1763, 1767, 1785. It's going to be, for me, my humble opinion, I'm looking for an exhaustion high off one of these two zones. Okay, it's an exhaustion high off one of these two zones or a break below the monthly open. That's the play for me on gold. Now, you'd think after a day like yesterday or after a week like this, where inflation is all about the talk of the town, that you would see a little bit more of a bump here in gold. But what you're seeing is that the markets aren't certainly buying, or they're not getting concerned of the inflationary outlook. And in fact, if you take a look, guys, I'm going to take a quick segue of the 10-year yield. This is the daily chart of the 10-year yield. I was talking to some execs on IG about this. They were asking some questions earlier in the week, and 161. I think I brought this up to you guys last week. That's the line in the sand that we drew, where if we do see a break lower, it's going to be a correction in yields. That means higher prices, right? Yields lower, prices higher. So bond prices higher, that is. So my point is, if this slope is accurate, if that weekly outside reversal we made into the close, or I guess this is, I'm sorry, the daily chart, if this outside daily reversal that we made into the open of the week here early is in fact sort of that reversal exhaustion for the rebound, then we're basically looking for like 154 on the 10-year. We haven't seen those rates since back in March. Just a possibility, just the threat of where we are here. So put that relative to where we were talking about gold and what's been going on with dollar yen. Some of these trades may in fact be quite extended here. Any questions on either of these or on where we stand with gold? All right, sterling. Here's British pound. Another snooze fest this week. It's been a crawler, a slow burner. I think, again, I think near term you could see still a little spike higher. But we're basically looking for resistance into this zone right here. Let me just add this here. This is the high day close for the month. Right? 618 of the drop, 38.24, 38.21. That's what I was kind of looking for on this stretch. Now, I don't want to be too meticulous here, but again, that would be the ideal spot if this is going to fail. Key support was 36.46 into 36.75. That hasn't changed. Let me take you a step back. I got too excited. Here's sterling on the weekly charts. Massive lateral pivot. Huge, right? Huge lateral pivot. Massive. We went over this at some time. So we turned from resistance. We've been sitting at support for the last 4 weeks. This has been the line in the sand. The daily chart had us starting the week at, okay, well, we're at last month's low. We're at that Brexit gap. We're at the 2020 objective yearly open, right? All things held constant. Just those lateral levels in and of itself is enough to have us looking for support. Guess what? We made an outside daily reversal off the lows. We noted that, which shifted our focus higher. Talked about 37.80, talked about 38.20. The divergence looks actually pretty decent. The lower the divergence reference points are to 50, the closer, the better and stronger the signal. But where we are in time could be a decent fade. And in fact, one other thing that you can keep in mind is if we take real near-term approach on this and just the wave count or just the advance of that first leg up, the 100 comes in right here. And that's my concern. We could be done. But it opens up that favorite zone of mine of 38, of the 100 off the low, 618 off the high. You guys hear me say it all the time, and the high day close. Really maps out a critical zone for sterling over the next 48 hours at 38 into 38.24. Key resistance. All right. Broader bearish invalidation I have written down as 38.88. So basically, if you break this spot, you'd be looking for a more presumptive move. But Just a side note there. Last but not least on my list is Looney. Here's dollar CAD. Big support. I want to see a reaction here. I love the long off this zone, and I hope this runs. Good day, guys. I'll see you next week. It's a big spot. It's a big spot. Here's what it looks like on the intraday, guys. 100 off the high. 124.90. Okay. 1, 2, 3. 618 off the low. 124.73. Right there. Low day close for the year. 124.85. Right in there. Here's the initial rebound. Now the test is into the US Open today into this 25-30 zone. You'd need to get through that. Okay, you'd need to get through that. So there's a couple of different scenarios that were in play here. I'm going to zoom this out to the 4 hour just to give you a picture. Here's what we've been looking at with dollar CAD. There's this pitchfork that we've been following off the lows, which had us looking at support here anyway. The weekly open, support here anyway. The April 2018 low, nice pivot in price. Within this, we had this consolidation, right, which looked like a lower high, a lower high, a higher low, a higher low, a higher low. So if this is legit, a break, former resistance, former support should be resistance here and the move lower. I'm favoring that this is just a messy break and we actually pivot back above. That's my favored move, right? If you pop above 25.20, your stops are break even or better. You don't want to keep your stops down there because that's too big for me. But we're looking for a reaction here today in US trade here on dollar CAD. If this holds, it's going to be a drop through 24.70 that gives you, I think, a much accelerated decline beyond that. But certainly the initial focus today, right now, right here, is for a reaction into this 25.30 zone. Questions on Looney? Okay, guys, that's everything I have on my end. Bitcoin, for those of you who are following this, that pitchfork that we had earlier in the week, the modified one still looks pretty good, turned ahead of the median line, support still 61.65 or 61,165. The April open is still where we have bullish invalidation, so that's where things could turn pretty ugly. Otherwise, it's all slope. And any other ancillary trades, I just wanted to talk about crude real quick because I do note that it was making a big move today. And a lot of people were taking note of this, were taking stock of this, trying to run with assumptions. Look, all it did was bounce off support. Hey, Pete, I got you right before the question, right? Here's crude. All it did was bounce off support. It's, you know, and this is the problem that fundy quote unquote guys will tend to run with. They see a move like this and they try to link some sort of major policy shift or something. No, it's a breakout. We talked about resistance at 60.60 for a while. There's the break of the weekly opening range. It's been a straight shot, 62.59. Here's the next upside level at the 618 retracement. It dropped at 63.85. Look for inflection there. A breach above 64.50 would be the resumptive move for the broader uptrend. Like I said, I'm a bull on broadly speaking energy commodity prices. I think in the current stance the market's in, but obviously you'll get interruptions and corrections. You know, this looks pretty clean. Even if you do correct lower, it's constructive above 60, and I'm looking for the breach above 64.55 to validate sort of the resumptive move. 64.55 is really big. So Pete, that's your high day reversal close. Former slope support, turn resistance. That's big. That's big resistance up here. All right. How about draw gold weekly from like, okay, let me go back. So you look at the gold weekly, Jay. Fork, November low 2015. July high 2016. August low 2018. So we were working with that one. Resistance converged, median line and support converged 25% parallel. So we were working with this, if you remember, for quite some time. I ditched this slope when we broke that high and kind of ducked back below. And I tried to sort of alleviate the fact that we ditched that slope with the red lines you see here. And that's what this slope is. So you can see that we're actually pretty darn close, a little bit wider off here as you get out in time, but essentially highlighting the same regions, right? There's your 25% line right there at 1650. And there's the median line for that pitchfork right there. Hey, 1763, even better, Jay. I love it. Love it. For the sake of clarity and just to keep things easier for the layman and the the guys on Daily FX and everything and everyone else who might be newer, I just kind of left it with that. But you're looking for a similar slope, Jay, that I'm already kind of eyeing. Does that make sense? So we're there. He says I can see. All right, cool. Pete, did I get your questions? SPX, did I show you that? Yeah, I didn't. So here is SPX on the intraday. Here's a 240. We're all sloped from here. We're all sloped. So the pitchfork off the low, here's your lows from February 26th, and specifically the March low, the high low, or the low high low, has been the same setup or the same levels we've been following. We've just been riding the median line. Now again, divergence up the yazoo, okay? But is that a reason to short? No. I'm just going to say this one time, guys. Again, my humble opinion. It's not a trade recommendation. I'm not exposed in this manner, but looking at this, like I said, yields are dropping. We just saw the 10-year break support. Watch today's close. If we close sub 161, that's the low day close from March, well, then that's quite problematic. It's an outside daily reversal into new lows. So it could be an exhaustion, right? We always cite that risk. But even if this is just going to correct, that's a drop lower. That's higher treasury prices. That's people pulling out of risk or at least going into the conceived safety. So what does that mean for the SPX? Make your own implications on that, Pete. I mean, I can't get excited about buying here, no matter what anyone's saying. I certainly don't have the conviction or the signals to try to short it yet, but I'd be cautious. Pete, does that help? I wish I had more conviction for you on this. And it is a constructive trade. No one's arguing that. But if you're not already positioned in something like this, I think it's prudent to kind of wait for that signal. But there's a couple of things that are looking interesting. Keep your eye on that treasury, guys, and keep your eye on gold. If gold starts ripping, I think that's going to be kind of the tell. And the break above 1667 is what would do that rip. But certainly some indicators, some early indications that the risk parameters for the markets are starting to shift and it's starting to be a little bit more concerning. All right. Okay, guys, that's a full plethora of lists today. I hope everyone has an awesome weekend. Best of luck trading into the close. Same to you, Jay, Pete, Agnes, Steve, Ted, Tiffany, Eman. Always a pleasure to see you guys. Have a great weekend. Again, abridged version next week. So I see you on Monday on the free session on Daily FX. I would love to see you guys in the roundtable on Tuesday if you're free. It'll be in the afternoon. And then again on Wednesday morning for the midweek update. We'll do a free session for Daily FX next week, and we'll wrap it up there. Best of luck trading, guys, over the next 24 hours, 48 hours. Have a great weekend, and I'll see you on Monday. Cheers.